Now, a group of MPs has called quantitative easing an expensive experiment. The Public Accounts Committee says the Treasury didn't understand the risks or benefits of the £375 billion programme. But what exactly is quantitative easing? I can't even say it myself. Here's 5 Live Money's Edwin Mitson to explain.
Quantitative easing, or QE, is used when central banks want to stimulate an economy but can't lower interest rates anymore. The central bank, the Bank of England, creates money electronically, and it then uses this money to buy assets like government bonds from financial institutions. The banks then lend this money out or use it to buy other assets, boosting the amount of cash in the economy. In theory, when the economy returns to normal, the bonds and assets held by the central bank are then sold back to investors and the proceeds are deleted, taking money out of the economy and reversing the process.
Well, Simon Rose is from the campaign group Save Our Savers. I asked him what he made of the report.
Yeah, I'm quite surprised. It's a pretty damning indictment of the Treasury. But as you say, yes, an expensive experiment. I mean, you look back at the when it first happened, and we had the then Shadow Chancellor, George Osborne, of course, now is perfectly in favour of it, saying, is in effect it's printing money, it's the last resort of desperate governments. And now to have, a Commons committee pointing out that the Treasury simply did not know what they were doing is flabbergasting.
The problem is here that we don't actually know what state the economy would be in without quantitative easing. So surely it's really impossible to both praise or criticise it, not knowing what impact it's had on economic growth.
Well, you say that. The Public Accounts Committee obviously don't believe that, as they are incredibly critical of quantitative easing. Now, I was asked to give evidence to the Treasury Select Committee, which is holding an inquiry into quantitative easing at the moment. And yes, as Mervyn King often says, it's a counterfactual. You don't know what would have happened without. What we do know, though, is that what quantitative easing has done. It has raised the level of inflation in the country, which is one reason why real incomes have gone back to the level they were a decade ago. It's helped to undermine the pound, which is making imports much more expensive. And it has also, as the Bank of England admitted, boosted asset prices of the very wealthy. It has redistributed money in the economy from the less well-off to the rich. And that is actually the only effect that they claim it's had. It's boosted the price of government stocks. It's boosted the price of the stock market. And what's happened on the downside is that money has been transferred from saver to borrower. The pension funds are finding it incredibly difficult in this low interest rate environment. QE, they believe, has cost them a great deal of money. Anybody who is currently retiring and getting an annuity will find that their income is considerably lower than they thought it was going to be. And these are problems that be with those people for the rest of their lives. You can't change the income on an annuity. Once you've bought it, that's it. You're locked in.
Right. And I mean, the fundamental issue was that the banks weren't lending, though, wasn't it? So, I mean, effectively giving them cash to lend is surely a good thing, and that may well have saved a lot of jobs.
Well, I would argue that it's not. We got into this crisis because we were massively in debt. Companies were in debt, people were in debt, the government is heavily in debt. And everything that the Bank of England has done, including quantitative easing, is designed to try and get the banks to pump out yet more debt. Well, I'm sorry, but you don't cure a problem like alcoholism by trying to give yet more booze to somebody. It's totally the wrong thing to do. We need to restructure the economy so we can actually grow properly without doing it on debt. Otherwise, we're just simply going to limp along forever. Now, it is true that the recession has not had some of the effects that previous recessions would have, but that's really because they've been indulging in pain relief, not in cure.
That's Simon Rose from the campaign group Save Our Savers.